The Reserve Bank yesterday kept the cash rate on hold, but it upgraded its economic forecast for unemployment and GDP.
Great news, Pete. Clearly the economy is doing a lot better than what the Reserve Bank expected. They kept the cash rate on hold yesterday. It is at the record low of 0.1%. It's going to stay that way until 2024. But there are a lot of positive signs. The bank governor yesterday talked about the unemployment rate falling to 5.6% in March. And yesterday they came out with some new upgrades, which was really good news. If we look at this slide here, you can see the critical one is GDP growth. They're expecting the economy to grow 4.75% this year. This is the big upgrade because it was previously expecting about 3.5% growth. So it's 125 basis points higher. GDP is then going to grow by 3.5% in 2022. Unemployment rate, we know it's at 5.6% right now. That's expected to drop to 5% by the end of the year. The RBA previously had that at 6%. And then to fall to 4.5% next year. And at 4.5%, that's really what the Reserve Bank classify as full employment, where everyone that is looking for a job actually has a job, so everyone's in work. And when we reach full employment, that's when the RBA expect wages growth will happen because different businesses are going to need to poach people from other jobs, hence pushing up wages and pushing up prices for inflation as well, because inflation's still at 1.1%. The RBA want it between 2% and 3%. And again, that's going to be in 2024.
And Ed, the RBA says it's keeping a close eye on the property market with price rises in all states.
Yeah, look, just last month, CoreLogic's figures show there were price rises of about 2% across the whole country. It's not just Sydney or Melbourne, it's across the whole of Australia. And there were some lending figures yesterday from the Australian Bureau of Statistics saying in the month of March, there was $30 billion in home loans, new home loans. That is a record high. And it's partly first home buyers coming into the market, which is they're taking advantage of that low cash rate. So in March 2021, the number of first home buyers getting home loans was 58% higher than March 2020. So the Reserve Bank said yesterday it's keeping a close eye on this. They obviously don't want people over borrowing. But at the moment, they say they're pretty comfortable with what's happening, but they are watching the property market and they will jump in if they see any issues arising.
All right, and Westpac reported half-yearly profits on Mondays, pretty big ones too, and well received by the market, Ed.
Look, really well received, Pete. The share price jumped about 5% on Monday. Westpac's profit was almost up by 200% to $3.4 billion. A lot of it was because last year was COVID. They had a lot of provisions on their books and they had to pay a $1.3 billion fine to Austrac. But Westpac's profit was pretty good. The dividend was 58 cents. And the bank chief executive, Peter King, came out and announced a huge cost-cutting program and a costs target. So their costs in 2020 are about $10 billion. Peter King wants costs to be $8 billion in 2024. And investors love that. But customers may not have been too happy because it does mean that Westpac are going to be closing some bank branches in the CBD areas. They call them duplicate branches in metro areas. And they're going to be shutting some of their overseas operations to really wind back their costs. So it was good news on the investment front, but maybe some customers would be a bit unhappy with reduced services.
And moving on to ANZ, its turn today with its half-yearly profits. Ed, what are you expecting on that front?
Look, I think we can think similar things to Westpac. Westpac's loan book grew as well due to first home buyers. I think we can see ANZ's loan book's going to grow as well. Their profit should be up. They did announce an $800 million impairment last week ahead of the profit results. So that'll be on their books. But investors are expecting a reasonably good result from ANZ. Westpac's dividend was 58 cents. Analysts are expecting ANZ's dividend to come in at about 62, 63 cents. So it should be pretty good result today from ANZ Bank as well.
And do you think it'll be the same for NAB whenever they release their results?
Yep, NAB's results are tomorrow. I think we can expect similar things. It should be a good, really a pretty good bank season across the board. For dividend-wise, there should be some decent payouts. Profits should be coming back. The loan books are all improving and there's a lot more first home buyers coming into the market that are really helping their home loan portfolios, which is one of their main profit drivers.
All right, Ed, good one.